Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, to wrap the week up, the market has been relatively choppy with the dollar index, which measures the greenback's strength against a basket of 6 major currencies, finally reached its objective of 108 after plummeting actually lower to the region of 107.56. Dropping from 110.86 is a 3% loss, and along with that, a 2-month low. This has seen the Australian dollar surge after its recent pullback on Wednesday, following Thursday's rally. An engulfing candle takes out this 60-day moving average and now looks towards a potential target at this stage of 67 to 67.5. Any pullback, as long as we maintain above the level of 65.1565, which is round where that 60-day moving average is. If we just click on it, you can see that the value is around 65.59. So no doubt the market is attempting to restructure itself and possibly gain further bullish potential to that top side target. Beneath 65.15 would negate the call to the upside, but at present 67.5 does look like it's very much clearly on the path to reach and reassess. The euro call has finally got to its first objective of 101 and now looks towards 103 as the dollar index remains weak and could see a drop towards 106. That would give enough momentum before profit taking is likely to emerge. Any pullback, I feel the market should find support roughly around the region of 101.20 and reassess from there. The dollar yen, the market fell over 450 points overnight and plunged through the level of 143 and then reaches around that 140 area. In the short term, I feel that the market would likely to be a little bit more towards a regain and pare some of those losses off, but I'd rather sit out for the moment as I've reached the objective of 143. I think it's time to reassess and see if the market can actually go lower. But the key level, as you can see here from the previous intervention from the Bank of Japan, found a base at 140, and that seems to be where the market is respecting at this point in time. The US is also likely to be a little bit quieter as the market will be closed in observance for Veterans Day. All eyes on the UK GDP latest today after the market surged and nearly posted a Marubozu candle. Nevertheless, still got 118 as a target. I feel that the bulls are still in control here and therefore see if the market can rally on. Any pullback should find support around 116.45. After 3 consecutive huge candles, the market is challenging now around that 1,750 after clearing the level of 1,729.33. Although I do have a call that we could get it towards 1,784 to 88 now due to the recent price action and the ADX is trending, it's a very nervous call because the fact is over many times gold is given away very much its gains quickly and we should be on our guard. Any pullback at this stage sees support around 1,740. Wrapping up with oil, well, the market did briefly touch its objective at 83.70 overnight, and from the 83.70-90 area, the market's shown a little bit more momentum. I do feel that it may actually eventually give up these gains and retest the downside, and if so, could actually see a little bit weaker. However, I feel that what's actually saved the market maybe from breaking 83.70-90 is the weaker US dollar. That does come in favor for oil. However, the demand concerns, in fact, with China's battling with the increasing COVID infections, has continued to rattle traders. Well, that wraps it for the week. Thank you very much for joining me. And as always, look out for the intraday report and hope you enjoy the great start to the new weekend.